It's not every day you see Wall Street play a game of tug-of-war, but that is the perfect way to describe what happened today. We literally saw one side of the market hit an all-time record high, while the other side stumbled and fell. So, let's break down this really bizarre and divided day.
So this brings up the big question, right? How on earth can the market hit a brand new record high and fall on the very same day? It sounds like a paradox, but it's exactly what happened. And that's the core mystery we're going to unpack right now.
And here they are, the two main players in today's drama. On one side, you have the old guard, the Dow Jones Industrial Average. It's packed with those big traditional companies, and it absolutely surged to a new record. But then, on the other side, you've got the new guard, the tech-heavy Nasdaq, and it actually slipped into the red. It's a perfect snapshot of a market completely split down the middle.
All right, so first, let's dive into the winning side of this tug-of-war. What was the rocket fuel that sent the Dow soaring to such a historic day?
Just look at that number, 48,015. A number like this isn't just a data point, it's a huge psychological milestone. When you see a record like this, it signals this powerful wave of confidence sweeping through a big part of the market. But as we're about to see, that confidence definitely wasn't shared by everyone.
So, what was going on here? Well, a big piece of the puzzle was politics. There was growing hope that the government shutdown might finally be coming to an end. That kind of news brings a sense of stability, and when that happens, investors often start moving their money. They rotate out of some of the riskier, high-flying tech stocks and into more stable, traditional value companies. Healthcare, industrials, the very backbone of the Dow.
Okay, so that's one side of the story. Now, let's flip the coin. While the Dow was basically popping champagne, the tech sector was getting a pretty serious reality check. So what was going on there?
This quote here really nails it. For me, the two words that just jump off the page are scrutiny and sustainability. All of a sudden, investors are asking some really tough questions, like, have tech stocks gotten way too expensive? And this incredible AI boom we've been seeing, is it actually sustainable for the long haul?
It wasn't just one thing, you see. The pressure on tech was coming from all sides. You had some of the biggest names out there, like Nvidia and Amazon, taking a hit. You throw in those nagging worries about AI and super high valuations, and it created the perfect reason for investors to say, you know what, I'm going to take some profits here and rotate their money out of tech.
And this whole split personality thing, it wasn't just happening in the stock market. Nope. To really get the full picture, you've got to look at commodities, which were telling their own dramatic story. And a lot of that was being driven by tensions all around the globe.
And wow, this chart just says it all, doesn't it? Just look at that contrast. Crude oil took a nosedive, plunging more than 4%. At the same time, you've got precious metals like gold and silver just soaring. This is what we call a classic flight to safety. When investors get nervous, they tend to sell riskier things like oil and buy assets they see as safe havens, like gold.
When you see a divergence this stark, you have to ask yourself, what is going on in the world that could cause one thing to tank while another one soars like that? Well, the answer really lies in the geopolitical landscape.
So how does all of this global stuff connect back to the numbers we just saw? Well, it breaks down pretty simply. Ongoing trade tensions just create this general feeling of caution. Global conflicts can put pressure on oil prices, which we saw, while making those safe havens like gold look even more attractive. And on top of all that, a weaker US dollar just makes it cheaper for buyers using other currencies to snap up commodities like gold and silver, helping push their prices higher.
Okay, so after a day as wild and contradictory as this one, the big question is, what does it all mean? And what should we be looking out for next? Let's try to boil it down into the key takeaways.
If you had to bottle up the market's mood right now, this is probably the best way to describe it. Cautiously optimistic. The record strength in the Dow gives you plenty of reason to be optimistic for sure, but you just can't ignore the wobbles in the tech sector and all those global risks that are still lurking in the background. It's a real balancing act.
So given all this, how might an investor play this? Well, the analysis seems to point towards a kind of four-step playbook. First, consider that rotation into value sectors. Second, maybe use precious metals to hedge against some of that risk. Third, diversify and be really selective if you're looking at energy. And fourth, and this one's crucial, keep a very, very close eye on any policy shifts, both from the Fed and on the trade front.
And this leaves us with the million-dollar question. We've seen this clear tug of war in the market between the old guard and the new guard, between optimism and anxiety. So, is caution going to win out and pull everything down? Or are we seeing the very beginning of a totally new kind of rally, one that's led by a completely different set of players? That is the story to watch.